Well, my first, going back when I learned about compound interest and we'll call some of the basics in finance were during my undergrad work. Went to a small school on Long Island, and was always intrigued by having the opportunity to make money and diversify myself. So, my first investment, the first stock I ever bought was McDonald's. And what I learned was buy things that you know. I used to eat a lot of McDonald's as a kid, and I owned McDonald's for probably over 30 years before I sold it, uh, because I felt that it had reached its a level that I was comfortable with exiting the position. One of my first jobs had a opportunity to invest in a 401k, so started to read about the various investment options that they had, and I enjoy reading to try and learn about how to invest and hopefully not lose money. And I was always interested in real estate, following properties down in the area that I ended up buying on Hilton Head Island, which is a resort area. But I realized that, boy, why were these units triple the price a couple of years ago? And now I don't think you can rebuild them for the price per square foot that they're selling at right now. So something didn't make sense to me. It just looked like a very good opportunity. Well, what happened was I had a job change. Uh, I had invested for about 8 years with this particular company. Had to basically take my money out, and decided that I needed to diversify, and decided that this was a good opportunity now to get involved in real estate through a self-directed IRA. My first real estate investment, I believe, was 2011. So if I was, watching the market and everything else and watching prices, and it's the old expression, buy low, sell high. So there's no guarantee where prices were going to go. But again, I felt based on the price per square foot, having known the market, doing my research in the market, that this is the same unit that was $300,000 a couple of years ago is now under 100. And I'm like, boy, that seems like a good investment. And you hope that, if you do make a mistake, it's not going to be that costly. My first acquisition was a complete learning curve. The learning curve was made up of what you can and cannot do with a self-directed IRA, and definitely the forms and requirements to be compliant with the IRS. What's needed year to year, and again, just to avoid any unforced errors. I relied on a lot of the people at the Entrust Group to help me and guide me. Obviously, had legal help as well to do the closing here in South Carolina. And you learn from your mistakes. But I was very fortunate when the timing and having the expertise of the people at the Entrust Group, to be frank with you, that were always very helpful and very willing to explain what I needed to do. Like Hermela, she is terrific. She is so quick to get back to you. Even if it's not her area, she will make sure it gets to the right person. I rely on her, and she's wonderful. She really is an asset and a great representative or ambassador on behalf of your whole organization. She's tremendous. Absolutely. I like to call pride of ownership. Um, the units that I acquired, one of them was in excellent shape. The developer had just put in new appliances, and it was literally spotless. The other one needed some TLC, and I did take some funds that I had and had to invest in getting it what we call marketable. And my perspective has always been doing long-term renters, because the short-term renters have a higher turnover and more wear and tear on the units. About the real estate market right now, again, I like to read a lot and keep up on what's going on in the marketplace locally as well as across the country, with interest rates very high and everything else. Prices have kind of like plateaued, at least down here. Yes, I am thinking about diversifying into another area that I've been following closely. And I might exit one of my Hilton Head Island properties. I have two that I have in self-directed IRAs, one through a Roth and one through a traditional IRA. And I may exit one of them and look to make an investment with those funds in one of these other areas. I think what I went through, my decision, why I decided to open up a self-directed IRA, that I firstly had the funds, secondly, knew the marketplace. I had been able to watch, prices and trends in the local market, because they say real estate is, everything is local. May be great in this area, but not so great, down the road. I think also having the ability to pick up a phone and call someone like that has the expertise, whether it be in a real estate division, the cash management division at the Entrust Group, is a huge benefit. And to be honest with you, people are always very friendly, and uh, they get back to you with what you need. Real estate for me, dollar for dollar, whether it was just luck or timing, has been by far the best investment. And having control when you watch owning stocks and bonds, and there's only so much control you have on if some bad news comes out, which affects the price of that share that you own. When you own your own property, you are really in your own, you are in control of the success or failure of the unit. And if you follow all the guidelines, and again, ask a lot of questions, you've got excellent qualified people at the Entrust Group that can definitely get you the answers. Know your real estate market, and I think it's a wonderful investment.